Hello everyone, welcome to the Commerce Logic. Today we are going to discuss objectives of tax planning. So before going into the discussion, please subscribe the channel by hitting the bell icon. Today we are going to discuss about objectives of tax planning. We all make a tax planning to reduce tax liability, and this is here first objective, that is reduction of tax liability. Next, minimization of litigation. Productive investment, healthy growth of economy, economic stability. These are all the objectives which we are going to see in detail. The first and foremost objectives of tax planning is reduction of tax liability. Tax planning will be done for reducing the tax liability. We all know this. Every SC will reduce his tax liability by the way of tax planning, as it helps to reduce his tax liability in a legal way. Tax planning will not only lead to tax reduction but also increases the savings. The main essence of tax planning lies in increasing the savings. A second objective is minimization of litigation. If a proper tax planning is held with taxpayer with the provisions of tax laws, then the incidence of litigation is minimized. The only solution of the tax liability reduction is to have a proper planning, and the SSC should have a proper knowledge about provisions of tax laws. Then, third objective is productive investment, harnessing the resources for social productive projects. If you pay the income tax, then the amount may be used for social productive projects. Then, relieving the taxpayers from burden of taxation and converting the earnings into means of further earnings. The main agenda or objective behind this tax planning is utilizing the tax collected amount for social productive projects, and in that you can relieve the taxpayers from burden of taxation. Based on these objectives of tax planning, the taxpayer or the SSC can relieve from the burden of taxation, that is from the payment of taxation, and also he can invest that amount into other investments. So next, healthy growth of economy. This leads to healthy growth of economy as well. So, this is synonymous with the growth and prosperity of its citizens. If the citizens are trying to reducing their tax liability, that means they are also trying to grow of themselves. So, in this context, a saving of earnings by legally sanctioned devices fosters growth of both. So, the main objective under this is a saving earnings not only helps the growth of particular individual, but it is also helping to the growth of an nation. Its measures are aimed at generating white money, having a free flow and generation without reservations for progress of a nation. So other important objective of this is to have a free flow of money, because it is an fully accountable money. So we need not hide the accounts of this money. We can use this money with a free flow. The next objective is economic stability. First one is availing of avenues for productive investment by taxpayers. Taxpayers can reduce the tax liability, and that amount can use for other investments, which may result in productive investments. And next one is harnessing the resources for national projects. aimed at general prosperity of the nation's economy. So it is helping the taxpayers as well as the nation. Taxpayers can also invest in productive investments. Through that, the nation's economy can be developed. The next, reaping of benefits even by those not liable to pay tax on their incomes. So it is always reaping the benefits. It is deriving the benefits to the taxpayers as they are not liable to pay the tax on their incomes with the help of this tax planning. Now let us see different types of tax planning. What are different types of tax planning? First one, short range and long range planning. Second one is permissive tax planning. Third one is purposive tax planning. We'll see these are the different types in detail. First one is short range planning. It refers to year-to-year planning to achieve something or a limited objective. The name itself is saying it is a short range planning. That means every year the SSC is going to pay the tax for previous year. So he will plan only for that year. That means for that year he is going to make a tax plan to reduce the tax liability on his income only for that year. That is limited to an year. Next, long range planning. This is entire opposite to short range planning. It involves entering into the activities which may not pay off immediately. This long range tax planning is not limited to a specific year. This may not pay off immediately. That means this long range planning refers to more than 1 year. Permissive tax planning. The name itself is permitting us to make a tax plan. Under this, it is expressed in provisions of the law. That means for a taxpayer to reduce his tax liability is permitted under tax planning. So he can take advantage of tax planning which is set by tax law. Purposive tax planning. This is not permissive tax planning and it does not carry such sanctions under permissive tax planning. For our purpose of reducing tax liability, we are making tax planning. So these are the objectives of tax planning and different types of tax planning. So thank you for watching. Please like, share and subscribe the channel. Thank you.